It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome into another Friday and into the Real Estate Breakfast with more property info, interviews, market analysis right across Australia. We're here, of course, every morning and streaming right now on Spotify and iHeartRadio. Has it been a long week for you? Has it been a frustrating one? Do you feel like perhaps blowing off steam? Well, you can do that with our new voice messaging service. Yes, you can add your voice onto the Real Estate Breakfast. The link is in the show notes below. We'd love to hear from you. And tell me that I'm not alone on this podcast talking about Barbara Eden from I Dream of Jeannie. That has made me feel so old this week, people not knowing who she is. As mentioned, it is a Friday, August the 29th, zeroing in on spring. Yesterday, you might have seen this, Domain ran a story about how buying your first home comes with surprises, as a Melbourne social media influencer quickly discovered. Now, after celebrating her big milestone, her first piece of mail was a $411 council rates bill that left her stunned. She says, "I didn't realise when you buy a house you have to pay to breathe," in a viral TikTok. Now, the video titled "Buying a House is a Scam" has been viewed by over 560,000 people since it was posted last week. Now, welcome to home ownership is all I've got to say, and everything that goes with it, good, bad and indifferent. And there is a messaging point, and that is many first-time buyers underestimate hidden costs like rates, strata fees and maintenance, which can, yes, add thousands beyond the mortgage. Saving for a deposit, I mean, it is one of the biggest hurdles for first home buyers without doubt. The challenge is Everest in proportion. And this week on that, the federal government announced that it is going to bring forward the expansion of the first home guarantee scheme to October the 1st. So joining us this morning and talking about what all of that means is Anthony Landau from Equilibrium Finance. And good morning to you, Anthony. Yeah, first council rate bill, $411. It's always going to hurt people's back pockets, I guess.
Yeah, good morning. Great to be here. Yeah, it does hurt the back pocket. Look, as you touched on, being a home buyer, and whether it's a first home buyer, investor or whatever it is, has a lot of other associated costs on top of the borrowings. Part of educating our clients is to understand all of that. Yeah, a little bit of a shock to start with, but that's the reality of owning a home.
Yeah, it is indeed. And, the first home guarantee scheme, this scheme has been in place since the Morrison government. So what we should do is go through some of the detail, especially for those who are not across this. Like, first off, what are the changes that will come into effect on October the 1st?
Yeah, look, as you touched on, this scheme, originally called the First Home Loan Deposit Scheme, a low deposit scheme to enable first home buyers to get into a property with a 5% deposit, was introduced by the Morrison government in January 2020. The main changes to the scheme from the original scheme is essentially lowering the barriers to entry. So the scheme, that now called the First Home Buyers Guarantee Scheme, has changed in its nature. There'll now be no income caps. There's changes to the pricing caps. So essentially each state has a property price cap that has increased, and there is now unlimited access. And the access to the scheme has become a lot easier for first home buyers.
Okay, so first home guarantee scheme, it has been somewhat of a political feel-good scheme. I don't think that's unfair to say. Plenty of people have criticised it. Others say expanding on it is the right thing to do. How successful, Anthony, has the scheme been to date for people to sort of be brought up to speed? And what has the take-up looked like?
It was originally limited to 20,000 places being allocated. They were taken up very early by 2022. So the scheme was taken up by first home buyers. It was limited in the providers who could access it, but it essentially, all of the places were taken up in those early days. So first home buyers have used it. It's enabled them to get into the market, and it's been well received by first home buyers over the last couple of years.
All right, so why don't we just have a look at some of the price caps in different cities around Australia? That would be of interest.
Yeah, it is very interesting. The price caps have risen dramatically, reflecting the growth in the housing market since the scheme came in 2020. I'll just run through the capital cities, might be helpful for your listeners. New South Wales, capital cities, price caps now gone from 900,000 to 1.5 million. Victoria from 800,000 to 950,000. Queensland's risen from 700,000 to $1 million price cap, now interestingly above Victoria. Western Australia's risen from 600,000 to 850,000. South Australia from 600,000 to 900,000, which is a massive jump. Tasmania from 600,000 to 700,000, and the ACT from 750,000 to $1 million. The Northern Territories remained on the same cap of 600,000. Nationally, across the board, bar the Northern Territory, we've seen some dramatic increases in the price caps, again, making it more accessible for first home buyers and reflecting the growth in the market.
We are talking to Anthony Landau on our Friday morning. When we come back, we're going to find out, how does the First Home Guarantee Scheme stack up against other government housing initiatives? And also, with the changes, does it really make much of a difference to the Australian housing market? We'll put those questions to Anthony after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And despite renewed momentum, housing turnover remains below average at 4.9%, you guys have reported, and advertised listings are down nearly 17% from the 5-year average.
Yeah, that's right. So basically what we've got is a housing market where values are higher, but the actual act of buying and selling property is lower than usual. And the reason we think that is because of some of the recent economic and geopolitical events weighing on confidence. And so people are just kind of holding back from the market, waiting before they jump in and make big decisions around buying and selling homes. There was also the fact that turnover was just so high in 2021 when interest rates were at a record low that probably brought forward a lot of buying and selling activity a few years back, and not as many people need to transact at the moment.
And talking of transacting, regional markets still outpaced capitals quarterly, but growth momentum is shifting back to major cities, which you guys have also talked about.
Yeah, this is really interesting. So over the start of the year, we've basically seen a bit of an outperformance in regional Australia. In the June quarter, regional home values were up 1.6% compared to 1.4% in the capital cities, which we put down to things like more affordability in regional Australia and stronger internal migration trends. So less people leaving the regions, more people going to the regions on average. But over the past couple of months, including the month of June, we've seen that the capital cities have actually outpaced again. So they've kind of retaken their advantage, if you like.
Whether you're a seasoned investor or a first-time buyer, know your property with us on the Real Estate Podcast.
And it is a Real Estate Friday. Hope you've got something planned this coming weekend. Maybe you're having a non-real estate weekend. Now, if we're going to measure schemes like this that we're talking about, the First Home Guarantee Scheme, it's important to look at the numbers and the data to see if it's heading in the right direction. Anthony Landau is with us. So, Anthony, how does it stack up against other government housing initiatives?
Yeah, as we all know, some of the biggest challenges for first home buyers is around the deposit, cash flow, getting into the markets. The First Home Loan Deposit Scheme is focusing on the deposit, providing essentially the lender's mortgage insurance is underwritten. You can buy a property as little as a 5% deposit. And yes, you can get the First Home Loan Deposit Scheme or the First Home Guarantee Scheme in conjunction with state or territory government schemes. The main state or territory government schemes are in and around stamp duty concessions, where if you purchase up to a certain price, you get a stamp duty concession up to that threshold. In fact, up to a certain range, you don't pay any stamp duty at all, which can be a massive saving for a first home buyer. In addition to that, there's first homeowner grants for newly built properties or renovated homes. In some states have schemes for the purchase of land and construct. You also have the other federal government schemes like the First Home Super Saver scheme, where you get a tax-effective way to build your savings through superannuation. It can absolutely be used in conjunction with other schemes to help leverage for first home buyers.
And with the First Home Guarantee Scheme, many will ask a question that for many scratch their heads about, and that is, will these changes truly make a real difference to the Australian housing market? What do you think?
That is the $64,000 question, that it's somewhat of a double-edged sword. It lowers the barriers to entry for first home buyers, as we've touched on, particularly with these new changes. But potentially it has the downside, if you like, of driving demand and increasing house prices, negating some of that benefit. Let's have a look at a little bit of that. Some recent forecasts have come out suggesting that first home buyer activity may in fact double from 20,000 first home buyers to 40,000 first home buyers accessing the program. You're going to get potential growth in the market. There was some recent report by Lateral Economics suggesting that the housing market growth will go from 3.5% to 6.6% in 2026. That's an additional 3% growth being driven by first home buyer activity and demand in the market. A property worth $800,000 might then be worth $828,000 with that market growth. The other thing it does is it actually increases the size of the mortgage for a first home buyer. So the 5% deposit means they're borrowing 95% of the value of the property. That means they've got to service a debt of 95% of the value of the property. So for first home buyers, they've really got to understand that the scheme does help them move into a property potentially earlier than they may have been able to do otherwise, but they will carry a larger debt that we need to demonstrate as mortgage brokers that they can service. So very much a double-edged sword, and I can't see how it will not increase demand and drive further market growth with the rollout of this program from 1 October.
Well, it's going to be an interesting one to watch, and it seems that the banks, as we mentioned yesterday, very, very keen to loan money, get the money out the door, and those loan-to-value ratios, yes, they're getting a little bit more generous on that as well. All right then, Anthony, well, you enjoy your Friday. We normally talk on a Saturday, so the surfboard coming out tomorrow, and look forward to the weekend.
Sounds like a plan, and it's lovely to have some spring weather in Sydney over the weekend.
Learn from the professionals and know your property with us. Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
Oh, absolutely. And it's also bringing a lot of people to Townsville, because at the moment, in a way, the best way to explain it, it's still affordable because we can foresee the change coming. And if it's going to follow like Brisbane and the rest of Australia, it's going to get tough. So with the money they're pouring into Townsville, people are trying to get embedded now.
I just want to circle back to Garbett with this report from PropTrack. Now, that range I mentioned from 341 grand in Garbett to 861 in Manly, that lower entry point, boy, all the eyes are on Garbett for that very reason.
Correct, because in a way that just shows you where we're going, but it shows you where we're at the moment. And we are finding a lot more people, and that price will rise because a lot more people can afford units over the house prices these days.
We connect you to the best real estate information across Australia. The Real Estate Podcast.